Are we heading toward a global made-in-China financial crisis?
GDP growing at the slowest
Like you said, second quarter GDP growth.
And if we are, how big of an effect will it have on the US and the rest of the world? Over the past 30 years, China has been the center of globalization. Throughout that time, their economy grew exponentially. One of the biggest contributors to that is China's real estate. Property developers expanded their real estate portfolios to hundreds of cities by taking massive loans, assuming that the huge migration of people into the city in search of jobs in recent years would continue. We're talking about hundreds of millions of dollars spent on modern glass and steel apartments, office buildings, and private houses all across China to meet the demand of billions of citizens. Take a trip to cities like Beijing or Shanghai, and in an hour or two, you'll start to notice something very strange. Large apartment buildings with top-notch amenities without occupants. These apartments are usually silent. Not a single soul to be seen. The locals in the area call these places ghost towns, because the only reason they exist is to accommodate a demand that isn't even there. Crazy, isn't it? It's even more crazy to think that the combined spaces of these ghost towns would give enough space to house the entire country of Italy. Today in 2022, the Chinese real estate sector is worth more than $50 trillion. That's 2 times more the US's GDP, and it's almost 4 times that of China itself. But what does that mean for the world at large? The crash of China's economy, the second largest economy in the world, will not only affect its country, it'll also affect the entire world should that ever happen. Meaning, whether we like it or not, we all take pieces out of the cake. That's a fact. If a line of major corporations that make up China's economy suddenly face problems in their business, it would cause a massive sell-off of bonds and falling stock prices. That is not even the worst part. 90% of Chinese citizens have some connection to real estate in China, so it's not a big surprise that global investors are fleeing China because of the high risk. Unfortunately, I wish I could tell you the real estate market is China's only economic problem, but you probably already guessed that it's not. China has 99 problems and democracy is not one. The Chinese Communist Party, otherwise known as the CCP, has its hands in everything in China. If you have any doubt, ask Jack Ma, the chief executive officer of Alibaba. The company suffered profoundly, by conservative estimates, a $70 billion loss after China blocked Ant IPO, and all because of one mistake. The outspoken billionaire openly pushed back against Beijing, and that was it for Jack Ma and his company. The result is that Alibaba will invest 100 billion yuan, or $15.5 billion, in support of common prosperity, as part of the initiative led by President Xi Jinping. Lately, Beijing has been encouraging companies to share their wealth. The CCP has also gone so far as to pump Chinese stocks to inflate the market. This happened when they felt they were losing the trust of the public. Also, due to the CCP's total control over the private sector and its manipulation of the stock market, not only is it difficult to prosper in China, but it also has led to international investors losing faith in the Chinese companies. And when only 9% of Chinese residents invest in the stock market, Chinese businesses will suffer a fatal blow, as well as the entire economy. You are probably thinking that's it, right? Sorry to burst your bubble, but it's not. Problems created by the Chinese government do not end here. The Chinese government has successfully managed to distance themselves from the rest of the world. Usually, when your country depends heavily on exports, you play nice with the others, but not President Xi. And this is why he can't have nice things. However, China does not suffer alone. This is because the economic relationship between China and the US is extremely symbiotic. A Chinese slowdown will affect the US in 3 main areas: trade, the US debt, and the value of the US dollar itself. The US imported $434.7 billion in Chinese goods in 2020, mostly computers, cell phones, apparel, and toys. But its exports to China are significantly lesser than imports and are creating a $310 billion deficit. What is the cause of this? In most cases, imports from America come from the US manufacturers that send raw materials to be assembled at a lower price. Apple comes to mind. When they are shipped back to the US, they are considered imports. Since the largest US companies rely on China, we need them. But that might soon become a problem. The collapse of China's economy will surely and severely affect America's ability to issue new debt. After all, China still holds the second largest amount of US treasuries. And if the Chinese economy falters, they won't be able to spend their money in the US. Thus, the US is also doomed. Since mortgage rates are based on treasury yields, this action will put pressure on US interest rates. Therefore, if you are worried about the recent increase in interest rates by the Fed, trust me, they will feel like nothing. And as China's demand for US treasuries fall, so will demand for the dollar. And as the dollar weakens, the prices for imports will increase. That's especially true for oil and gas. So as you see, China's problems are much worse than anyone would like to admit. And what's more frightening is that it will probably drag the whole world down with it. The question is, when and what can we do about it? What do you think about this situation? Let us know in the comment section. See you in the next video.